This conference will now be recorded.
Good evening to all of you present for today's session. So, after a long week off, we are back to the classes. Yes, hope everybody are in the session. Please join the session as soon as possible. Don't be late. Okay, so last class we were doing the Toyota exercise. So, almost everybody were able to get the solution. We had arrived at the IRR for Toyota exercise. Okay, so today we're just going to complete the table which was pending. Okay, which I told that I'll be doing for the next class and some questions to be answered in that Excel file. So please open that Excel file, Toyota Excel file, so that we can start the program. Okay, so I'll just share the screen with you in the meanwhile. Please open this file. We had to complete this table and then we had to answer all these questions. Keep this file ready. Yes, Pa, are you ready with the screen? Shall we start? Okay, done. Right. So here we had arrived at the IRR 30.23%. Okay, and now we are going to complete this table. What is this table actually? Depending upon the debt percentage and the interest rate of the bank, what would be the IRR rate is what we're going to determine here. Okay. So now these are all the IRR rates at 30.23 we have got. So if the debt rate is at 20% and the interest rate, the debt is at 20%, interest rate is at 10%, what is the IRR? Like that. So now how to complete this table is, first of all, you're going to select from 30.23 the entire table. From 30.23, you're going to select the entire table. After selecting the entire table, you're going to go to the data tab. Go to the data tab. Okay, after formulas, you have data tab. There you have what if analysis. What if analysis. And there you have the concept of data table. And there you have a small dialog box giving the information of the row input cell and the column input cell. Okay, I'll repeat again. Select from 30.23 in the entire table. Okay, then go to the data tab. Go to the what if analysis. Go to data table and you get a small dialog box like this. And over here, you have to select that data to keep it ready. So here you're going to put up the row input cell and the column input cell. Okay, so what is the row input? Row input is nothing but this interest rate of 13%. Column is the percentage of debt, which is 50%. And give us OK. So once you give us OK, yes, it will have arrived. So then now you can make out, see, on 50% of your debt with the interest rate of 13%, IR is 30.23%. So here, if you observe also, now debt is at 50%, right? Total capital required is this much. How much it is? 21 crores, 4 lakhs, out of which 50% is given as debt, 50% is taken over by equity. So if debt is at the rate of 50%, debt percentage is 50%. That is this. Correct. Debt percentage is 50%. What is the interest rate? Interest rate is 13%. Interest rate is 13%. So debt rate is 50, interest rate is 13%. So what is the IRR? 30.23%. Like that, you have to study the table. So I will answer those questions which are there at the bottom. First, you complete this table and then we'll go ahead. I hope this table is clear for all of you. Any doubts or something? So first complete this table and then we'll answer those following questions. In case if this table is not clear, you can unmute yourself and let me know. I'll repeat that table. Otherwise, we have put it up in the chat box. And anything would be okay for me. You want me to repeat it again, Arya? I'll do it. Wait. So here, Arya, See here it says, one second. Yes, pa. So here when you come back to the Toyota case, what it says. Okay. It says that now see now what is the percentage at which we have received IRR? It is 30.23%. That 30.3% is already there. Okay. So here we have arrived at 30.23%. Now, if IRR is 30.23%, at what stage or which way we have arrived at? Have now the total investment required by the company is 21 crores 4 lakhs. Okay, so here 30.23 is arrived at. Now, if I have to get IRR, that much means my discount rate should be more and my MRP should also be. So here, debt percentage. Now here in this case it is 50%, which has been sanctioned by the bank at the interest rate of 13%, which are marked in yellow there, correct? But in case if it is 30% of debt and 80% of equity, so like that we are going to judge that. Okay. So what I'm going to do is first of all we are going to put that formula. Okay, so let's begin. So let's start. We're going to select from here 30.23. Okay. Oh, we do one thing, right? Right. So let's start. Select this entire table. Go to Data tab. Go to What if analysis data table. And here in the row input cell, you're going to put up the interest rate here, 13%. Okay. And then so here coming to the column side. So this have selected. Again, here you want to select this debt. That's it. Okay, so we get the answer like this. Okay, now with this table, what you can understand. If the debt was 20% with the interest rate of 24.39%, so with the interest rate of 10%, if the debt was 20% sanctioned, IRR used to be this. If the debt sanction was 55% with the rate of interest is 30.25%, then of course it is this. So like that. Now here coming to the questions. Now in this question only you see if the because the loan sanction was 50%, okay, and at the interest rate of 13%. So what is there? It is 30.3%. Okay. Now it's clear, Arya. Yes. So now we'll answer these questions quickly. So first finish off the table. I'll give you 2 minutes. Now what's the first question says? What is the total investment required? So one of you can give me the answers. What is the total investment required for this Toyota project? As per you. Yes. One can answer this question. What was the total investment required for this business? Super. 21 crores, 4 lakhs. So I'm going to put up the same thing here. Also, what is the IRR if the debt percentage was 60? Debt percentage if it is 60, what is the IRR? Yes. Oh, the debt percentage was 60 at the rate of 13% interest rate. Debt percentage is 60% of the bank loan. Okay, at interest rate of 13% is 33.83. If the debt percentage was 60, with interest rate of 13%, the last which one? The last one, sorry, 33.83. Next. What is the third question? What is the cash available at the beginning of fourth year? So how much cash is available at the beginning of the fourth year? Cash available at the end of the third year becomes the available the opening cash available at the end of the which is this fourth year suppose. Yeah. So what will be the cash available at the beginning of the fourth year? Third years. So what is third year closing cash plan? This one, total cash flows. So third year, this one. Fourth year is this. So here actually net cash flow is being given. Okay. So you take up the proper cash flows here. So what will be the cash available at the beginning of the fourth year? Beginning of the fourth year means this. How much of equity was raised? Here is the answer. What is the revenue in the third year? Sales. This one. So please answer all these questions quickly. Complete this table. I'll share the screen with you. Have you completed your table? Any doubts you have, the questions which you have answered? Have you finished the entire table? Okay. I'll give one more case study. Before you start that, go detailedly study the case study. I'll give you 10 minutes. Please go through, read very carefully. It's not like pharmacy or what do you say? Christina, cash available at the end of third year becomes opening balance of cash and the beginning of the next year. Cash available at the end of the third year. Third year's closing balance will become the next year's opening balance, which we all of us know. Simply with cash. Because cash cannot such it go to no position. What answer, Christina? Forward in the Toyota, sorry, Volvo case study. Let's go through the same. I've sent both the files. Kindly check, have you received the files? Yes, I've sent you both the files. Kindly check, have you received both the Excel and the Word file? Yeah. So you're going to open the Word file. Okay. Because see, as I've been telling you, going to the case study plays a crucial role because it is not directly attacking the workbook. Lot of questions will be there. So to understand everything and to give a solid solution, okay, you want to do this case one. So what you want to do is, anyways, you've got the case study in your phone, yes or no. So just put on the screen and just go through the entire Workbox case study, Word file. Then afterwards, we will talk about the Excel file. In case, while reading the case study, in case if you have any doubts, you can unmute yourself and you can ask me. You can also post to the chat box. Please go through the case study. Go through the case study. My voice is not audible, Bhumika. Bhumika, is my voice not audible? Yes, so one of you can just confirm is my voice audible or no? Yes, I can just log in again in case if my voice is not audible. Now, just want to tell is go through the case study taking your time, because as I told you, half the answers you'll get by reading it thoroughly. I'll be discussing parawise, I'll be doing the case study, that is different. But especially you're going to go through the case study and then you're going to answer those questions in the book. Okay? Bhumika, just check one whether my voice is audible or no. Another 2 more minutes. We'll start with the this case here slowly. It's a pretty big one. 2 minutes. We'll begin the exit work. Shall we begin slowly? Shall we do some few parts of the Volvo case study, or you still require time, another 2 to 3 minutes, or are you ready? If you're not ready, also you tell me. If you're ready, also you tell me. Or you want some other 2 minutes time, you take your time and you go to the case study. Yes, all of you ready? So let's go ahead. Yeah, so this is a Volvo case study. Okay, fine. So financial modeling case, premium buses. Now, cost assumed here is taken for a single bus by Volvo. This is for a single bus, not for multiple buses. Cost assumed here is taken for a single bus, which is made by the Volvo company. Okay. Now, the actual bus costs around 70 lakhs. What is the cost of the actual bus? It is 70 lakhs. So here, the actual bus costs around 70 lakhs. However, along with the vehicle, there are additional charges like registration of the bus, insurance of the bus, taxes, etc. I'll read again. Cost assumed here is taken for a single bus made by Volvo. The actual cost of the bus around 20 70 lakhs. However, along with the vehicle, there are additional charges like registration, insurance, taxes, etc. Also, since the bus will be used for hiring purposes, only for hiring purposes, we leave some margins for the accessories that might get added or right. So that might get added to it. Some amount will have to be spent on foreign or India permit. Okay. So additionally, expenses could go up to 5 lakhs, and the company can incur 10% maintenance cost to the bus on the revenue of that year, which the escalation rate of 2 point. Okay. Due to excessive usage, the average of the bus, the usage of the bus is assumed to be what, 4 years. It is there. So lifespan of the bus is only for 4 years. The income tax department follows a straight line method of depreciation. We have three, four cases, three, four methods of depreciation, but this follows straight line method. Okay. The income tax department, of course, follows straight line. However, looking at the working condition and usages, we assume a useful life of the bus at 4 years. Okay. The company couldn't purchase the bus through its own cash reserve. I'll repeat this statement, very important. The company couldn't purchase the bus through its own cash reserves. Then the company couldn't purchase the bus through its own cash reserves. It needed help from the bank. The company took a loan of 75% of the total cost of the bus. Now, what is the total cost of the bus? It is 75 lakhs. 70 lakhs is the actual cost plus 5 lakhs is the maintenance additional expenses of 5 lakhs. So totally it is 75 plus 5, which is 70 plus 5, which is equal to 75 lakhs. Okay. And now the company took a loan of 70% total cost of the bus. The bank, however, charged an interest rate of 15% with a tenure of the loan of 4 years only. Interest rate value is expected to be high as the vehicle will be used for commercial purposes, obviously. So here, the repayment, right? So interest rate if expected to be high, as the vehicle will be used for commercial purposes. The repayment schedule is going to constant amount to be paid every year. You also have an option to pay back a lump sum amount at the end, at the time of closage of the loan. The bank insisted to pay some amount every year. The cost of the equity is 20%. So, as I told you, the bank insisted to pay some amount every year. The cost of equity is 20%. Once the bus service starts, the bus has 35 seating capacity with a load factor of 50% and mileage is only 5 kilometers per liter. So mileage the bus gives is only 5 kilometers per liter. Load factor 50%, bus seating capacity is 35 number sitting capacity. Total distance from Mumbai to Pune and back is around 155 kilometers. So the time taken for one trip from Mumbai to Pune, right? So here once again, see here coming back to the same total distance from Mumbai to Pune and back is around 155. Round trip is what we say. Total distance from Mumbai to Pune and back. I'm talking about this statement. The time taken for one trip from Mumbai to Pune is 3 hours. The Volvo company works only for 12 hours in a day, okay, and 4 trips per day, which means correct. So 3 hours. So totally it is 4 trips per day means 12 hours it will come up to. Next, also the other cost to be taken, like the driver cost. So for one trip, the driver will charge you 600 rupees for one trip. And the toll price to be paid during the trip is 800 rupees and other miscellaneous expenses of 300 per trip. Miscellaneous costs will include the cost of parking the bus in the shade. Amounts acts as a buffer and also takes into consideration the cost associated with the co-driver. To generate revenue, Volvo decides to charge 350 per person. Okay, so for one, it will charge around 350 rupees, and because of inflation, they plan to escalate the ticket price by 10%. So the increase in the ticket price by around 10%. The diesel costs 64 per liter, with the escalation price of 15%. Inflation also includes driver's costs and miscellaneous expenses. So earning the above course of running a premium bus service station service between Mumbai and Pune. So evaluating the above proposal of running a premium bus service between Mumbai and Pune, assume the tax rate is 5%. The income generated from this bus will be invested in some other fields to make an additional income of 5%. This is the basic case which we have in our hands. Again, open your Excel workbook. Yes, have we come to this part? Please open the first sheet. Open the sheet, keep it ready. So all these particulars we're supposed to fill up in this sheet before venturing into the profit after tax calculation, CFS, okay, all those things. So let's start now. I've also kept the sheet ready. Yeah. Yes, pa. Now, what is the now? One more thing. Let me tell you. While filling up the details in the sheet, please also keep your Word file open because both are important. Without that, we can't fill up this. So, what is the total cost of the bus? Now, he says in the word thing, cost assumed here is taken for a single bus made by Volvo. The actual bus costs around 70 lakhs. However, along with the vehicle, there are additional charges like registration, insurance, taxes, etc. Also, since the bus will be used for hiring purpose, we leave some margin for the accessories that might get added to it. Some amount will have to be spent on acquiring All India permit to use the bus for transportation purposes. So all the additional expenses only. Additional expenses could go up to 5 lakhs. So the cost of the bus is 70 lakhs plus 5 lakhs of additional expenses. So 75 lakhs becomes the total cost of the bus. Next, what is the maintenance? See here, I'll continue from here only. Additional expenses could go up to 5 lakhs and the company can incur 10% maintenance cost on the bus on the revenue of that year. So your maintenance is 10%. And this maintenance, yes, maintenance cost on the bus on the revenue of that year with the escalation rate of escalation rate means increase in the rate, rise in the rate. So every year, 10% maintenance cost on the revenue of that year with the escalation rate of 15% yearly. So every year we'll have an increase of 15% in the maintenance cost. Okay, so your escalation rate will be 15%. What is the total life of the bus? Here. Due to excessive usage, it is assumed that the life of the bus will only be for 4 years. And the depreciation method, you follow straight line method of depreciation. So here actually it's not been given here, but you put up as, have to add there, put up as 25% as a depreciation. Depreciation rate is 25%. Next, come to the financing part. So, assumptions of the bus we have done. Now to the financing part. Please complete this if you have not done. Complete the assumptions of the bus. Yeah. All of you have finished off the assumptions of the bus. You go for the financing part now. Right. So now coming to the financing assumptions. Now we'll go back to the case. Okay. The income tax department follows a straight line method of depreciation. However, looking at the working conditions and the usages, we assume a useful life of the bus of 4 years, which we already filled it up. Now we'll come to the next one, financing part. Company couldn't purchase the bus through its own cash reserves. So you know what is total cost of the bus? 75 lakhs is required to purchase one bus. So company couldn't purchase a bus through its own cash reserves. It needed help from the bank, obviously, because it can't shell out that much of money. So it needed help from the bank. The company took loan of 75% of the total cost of the bus. Okay. Company took a loan of 75% of the total cost. Now, total cost of the bus is 75 lakhs, out of which 75% of the same was taken as the loan from the bank. So, which means debt is 75%. So, remaining is your equity. Okay. Now, the bank, however, charged an interest rate of 15%, with the tenure of loan is 4 years only. Okay. So 75% is raised by raising debt, means remaining is raised by equity, which you also done with the earlier case laws. So it is 25%. What is the total interest on debt? Interest rate is how much for the loan? Interest rate is 15% with a tenure of loan of 4 years only. So 15% is the rate of interest. Tenure of the loan is 4 years. Okay. So what is the cost of equity? Cost of equity is being given here. Now see, I'll come to the same para itself. Interest rate value if expected to be high as a value vehicle will be used for commercial purposes. The repayment schedule is going to constant amount to be paid every year. So every year a fixed amount has to be paid towards the loan. There is no changes in that. You also have an option to pay back a lump sum in the end, but it is a, what do you say, that it is, we have a clarity that the loan has to be repaid. So every month a fixed amount is to be paid to the bank for the loan clearance. Okay, and at the last lump sum amount can be paid in the end to close off the loan. That option is also there. Next one, the bank insisted to pay some amount every year. The cost of the equity is 20%. Okay, so cost of equity is supposed to give you as 20%. Done. So next is general assumptions. Tax rate. Okay, I'll explain you both these columns, so you just fill it up like that only. Now the tax rate. What is the tax rate? So I'll come back here again. Assume the tax rate is at 5%. Okay, and debt is to be. So this debt in the form of percentages 75%. What is the value of the debt? So debt raise is to be what? Total cost of the bus is 75 lakhs into 75% is being given as the bank loan. So 75 lakhs into 75%. So debt means equals to 75 lakhs into 75%. So this much you should be able to get. And what is the interest income? Okay, so here, what's the next one is we have to find out the, so here, what is the interest income is what you have to calculate here. Okay, so let's see to that. So your interest income will be 5%. Okay, which is being put up in the case study here. Here. Tax rate is 5%. Your interest income will also be 5%. Diesel rate. What is the rate? It's being given here. See, diesel rate is the diesel required by the bus is charged at rupees 64 per liter. What is the escalation? A rise in the diesel price 15% with an escalation price of 15%. Okay. And of course, what is the inflation rate? Inflation escalation both have the same base. So inflation rate will be considered as 15% again because both have the same base. So it is 15%. That's all. So please complete the first two, these two, and then we'll go to the bottom two. Or the bottom almost everything. So complete these two financing in the general part. Yes. Completed assumptions of financing, assumptions of general, and assumptions of the bus. There is part A. Not because they are done, you have still gone to part B. There is operating revenues. So have all of you completed the first three boxes? Assumptions of the bus, assumptions with regard to financing, assumptions with regard to the general part of your the general part of the yes, have you completed? Are you done with the first three? Now you tell me, are all three columns clear for you? Any difficulty to understand or some confusions are there? Because I stepped down to the bottom three. Now, Otta, Nandini, could you explain the debt is to be part? I got disconnected. The debt amount is 75 lakhs into 75%. Debt amount equals to 75 lakhs into 75. See here, Nandini. This one equals to 75 lakhs into 75%. Okay, next. Coming down to the operating expenses. What is the total seating capacity, ma'am? It is, where is it? Here we have, see. The seating capacity as a bus has 35 seating capacity. So it is 35 passengers. Next. What is the load factor? Load factor is How much? With a load factor of 50%. What is the ticket tariff per ticket? So here, tariff you just check. Yes, but here, see. Yeah, coming to your tariff, how much we have to put there up as. So tariff comes up to 350, your ticket price. So 350 per person. That's your tariff rate. Next, escalation rate, increase in the price. Say, to generate revenue, Volvo decides to charge rupees 350 per person, and due to inflation, they plan here this parameter. They plan to increase the ticket price by 10%. So it is 10%. Next, fuel efficiency. How much fuel is required? Fuel efficiency is how much? 5 kilometers. See here, if it's been put up here. So if you go here, 64 per liter with a scheduled price of 15%. Okay, coming to the fuel efficiency. Yes. Can you see, observe here, once the bus service starts, the bus has 35 seating capacity with a load factor of 50% and the mileage is only 5 kilometers per liter. So for 1 liter, it will go 5 kilometers. So 5 kilometers per liter. So it is 5 kilometers. What is the driver cost for one trip? It's been given here only. The driver cost is around 600 per trip. Miscellaneous, what is the amount? Other expenses. Miscellaneous charges per trip is 300 per trip. And what is the toll amount? Toll charges you pay, right? That is 800 per trip. Next, what is the route? Route is from where to where? Okay, Mumbai to Pune. So you can just put it short M slash M hyphen P. What is the total distance in kilometers? Total distance in kilometers, it is 155 kilometers. And what is the estimated time per trip? How much time it may take? 3 hours. And how many trips per day? How many trips per day? See, 3 hours per trip here. And the Volvo company works only for 12 hours in a day, which means 4 trips per day. So it is 4 trips per day. Okay, so you're going to complete these three tables and save this. Okay, so that tomorrow you're going to put up with your income statement. So first you had done with the pharmacy case, then the Bangalore cafe case, Toyota case, and now you're going to the Volvo case. So the fourth case study which you're operating with. So complete this table. So that income statement we can do off in the next class. And yeah, one more thing very important for you. Once you fill up all these details, again tomorrow before starting up your session, just go through the case study once again. Because what happens, again and again if you go through the case study, here 50% of the work becomes easier for you. That's why. So just go to the case study that in that Word file and the details what you have put up in this Excel file, so that when we put up the income statement, it becomes easier for us to go forward. Yes, are you done updating the details? No, the video is only been sent, no, Akshaya. Then what else you required? The complete video has only been sent, no, of the class. They only can just capture it. Excel sheets, the complete part, the complete class has been given, no, for you. So it will be in that itself. So all of you have completed the table. Fine. So we'll wind up the session so that in next class we'll start off with income statements. Okay.